Novavax, ticker NVAX, is down about 1.5% today, but the main reason we're focusing on this stock is they are still pending some FDA either approval or rejection. This stock has been range bound, so what are some key levels we want to be paying attention to? So, as of right now, from a resistance standpoint, we've already got these dotted out. That's going to be $8.70, $9.25, $10.35. I think $10.35 is going to be this nice level to be paying attention to because, again, we have been range bound for really most of this year. Since kind of February, we've been range bound. Every time we come in, well, the 2 times we've come around this area, we've been selling off. And then obviously the other times we've done the sell off a bit earlier, kind of around this 9.25. So definitely things we could be looking at doing smaller size at the 9.25, but if it's pushing up to the 10.35 before FDA approval, then they can usually be quite good short bias levels. Again, if the FDA approval, that's always going to be stronger than technical levels. So obviously the fundamentals will be the driver. You probably should let it play out a bit before looking back at technicals. Now, if we end up breaking out of this kind of range bound to the upside, again, this will probably only happen if we kind of get some sort of FDA approval, but then we're paying attention to $12, $14.25, and a final level at $19.20. So those are going to be the key resistances. One thing I want to note with these resistances as well, just in case you're watching this a few weeks or even a month down the line, is what levels are changing. So these dashed lines, these are from the 6-month chart. These haven't really been changing since it's been in its range bound. Basically, since February, these lines aren't really changing. So kind of $8.70, $10.30, $12 will roughly be the same, even if you're watching this a few weeks or months down the line. So we're still paying attention to them. However, the 1-year levels are changing a bit quicker. So if you're watching this, I would say a month or longer down the line, then I would start to ignore the 9.25, the 14.25, and the 19.20, just because these levels are changing a bit. Again, that's only if you're watching it a month down the line. Now, just to quickly note the support side, again, just looking at kind of what's range bound, kind of this, well, kind of where we are now, normally tends to be kind of the low end of where this range goes. So again, could be a potential buy for looking to buy the range bound opportunity. But if we break lower, 10.50 is going to be that next key support to be paying attention to. That's our 6-month first deviation. And again, that's normally what we're paying attention to because these 6-month levels aren't really changing. So they can be easy to trade. And just below that as well, we have the second deviation on the 6-month at $4. So they're going to be the 2 kind of key supports to be paying attention to. Could also be paying attention to kind of where you are now. That's kind of just been previous support, but not a deviation. So I'll probably be a bit more patient to the 550 than I would potentially be quite long bias on it. And again, if we're going to the upside, looking at the key resistances, I'm keen on anything kind of above the 10.35 or higher. Just because, again, that's where we can get kind of the highest or the best trades, at least going back a few months.